Hello everyone, welcome back. In this one I'm going to show you how to trade the inversion fair value gap. Looking at this example here from today, going long here after we traded above the inversion fair value gap. Wasn't able to get my entry inside of it because I'm managing a live stream and also having to manage my accounts at the same time. But if you do want to see an example where I'm actually entering inside the inversion fair value gap, you can look at the video that I uploaded yesterday on macros and how to trade macros. And I use the inversion fair value gap as an entry model in that video as well. So if you want to see an example, have my team upload the link above. So with that, going long here, covering above these smooth highs here, above this high, inside the 50% of this wick, and then closing out here at the midpoint of the opening range gap. And then I have runners that I left to go for the day, see if we could close the gap, keep trading higher, but ended up getting stopped at break even. No big deal. Paid myself 60% of the position at all these key levels here. So let's break down what I was looking at, how I was able to anticipate the setup, and more importantly, how you can use inversion fair value gaps going forward. Let's get into it. So starting with the daily chart, again, as with everything I teach, right, there is no secret. You have to understand where the market's going, why it should go to where it's going. Then from there, all these models will work flawlessly in your hands. The fair value gap, the order block, the inversion fair value gap. Any entry you're using, again, will only be effective if you know where the market is going, right? So let's start from the daily chart. The key levels that I was working with today, and before I continue going on, after this review, you can see a video that'll be uploaded at the end, which will be the live callouts from this morning. So you're going to see me walk in the market candle by candle with precision that most can only dream of. And that'll be here at the end of this review for you to see how I'm using all these things in action to help you out. Let's get to it. So daily chart here, looking at the bullish order block, 2 down close candles here, extending that opening price through. That's also going to be the high of the new week opening gap because this opening price was where we opened on Monday's candle, and then Friday's close. That's also creates the new week opening gap. So this was a key level today. The bias was bullish, and before I go into the lower time frames, you're probably saying, well, this was a down close candle. What a bias is there to help me with is understand where I want to frame most of my leverage and most of my trades. So for the morning session, as we're dropping down into this bullish order block, that's where I was looking for a reaction to trade higher. And it'll make more sense as we drop down into the lower time frames. We ended up having a bearish PM session, but nonetheless, this gave the bias and the setup for the morning session. So also going up to the weekly chart, we also have a weekly bias. I'm assuming you guys are checking out the weekly outlooks that we do on Sunday, where we have been calling this market higher for the past few weeks. So again, sticking with that on the daily chart, especially as we trade into a down close candle here. All right, so hourly time frame, huge displacement range higher on Wednesday, CPI. We got a retracement back down into the range today. So what I was using was the daily order block, the opening price here, and this bullish breaker on the hourly. So as we were trading down into that in the morning session, that gave the low of the morning and then an expansion higher. And that's all I need, right? All I need to do is capture range. I'm not worried about where the day closes, right? Because this is not about being right or wrong. It's about finding setups that are making you money. So as we drop down, we make the low of the day at time, catching the expansion to the upside, using the daily order block here, which is that black line, and also the hourly bullish breaker. All right, 15-minute time frame. I have the new week opening gap extended through. That's the current new week opening gap. Let me zoom out so you can see that new week opening gap. You would extend that through all week. It's going to be very influential. Use it to call the high of the morning session on Monday, and also use it to call the low of the day here on Thursday. Definitely levels you want to be paying attention to and using in your analysis. So zooming in here to the 15-minute chart, we have the sell side here. So this was yesterday's morning session low. We took that out, creating another low here, and then we dropped down into that low at 9:30, right? So what I'm looking for when I'm bullish, I need to see one of two things, right? And I believe I said this in the last video as well. The market has to drop down below sell stops here or into a discount inefficiency, right? And we get both of those here, even better. Sell side taken, dropping down into a discount inefficiency when I am bullish. So when I see that, I'm expecting the low of the day to form here because I'm looking at the right time. And then from there, we look for the market to trade into the high here and this high here. And this high is particularly important because it's forming on the 8:30 high impact news driver. So a lot of liquidity, a lot of speculation is coming in around those times. So the swing points that form around that time of day are going to be very influential. So on the 15-minute chart, market drops down, takes out the low here. Look at the bodies perfectly stopping at the new week opening gap and that daily bullish order block that we were looking at. And then that gave the long setup for the distribution of the morning session. All right, 5-minute chart here. At 9:30, market went into quite a bit of consolidation. When that's the case, I don't rush it. I like to wait for the market to break out of that consolidation. Not that I'm trading the breakout, but I like to see the market leave that range, right? Because if you take a bunch of trades while the market's range bound and it's giving all that back and forth price action, it's really easy to take several losing trades and even go into deep drawdown if you don't have the ability to control yourself. So what I wait for is for the market to leave that range. And if I'm bullish, I want to see the market take out these equal lows here, right? You see we have equal lows here and here. I want to see the market drop first if I'm bullish again, because what that's going to allow me to do is anticipate the low of the day and then get a long entry in the distribution. This is what I want to be trading. Accumulation, manipulation, distribution. I want to trade the distribution phase because that's generally going to be the biggest run of the AM section. And that's what I'm looking to do with my trading, is capture the run for that particular session. So with that, we drop into the sell side. Look at the bodies perfectly stopping here at that daily bullish order block and also the high of the new week opening gap. And then from there, you see they leave equal highs here. And then that's the high that forms on the high impact news. All right, so looking at the 1-minute chart here, let me label 9:30. So 9:30 starts the AM session. Went into a consolidation here, wasn't touching anything within this. Again, my rules are, I shared this in the last video as well. When the market goes into a consolidation like this, I'm not looking to push it. I wait for it to leave that range. And especially since I'm bullish, they had what here? Equal lows here and here. So I'm not going long when I'm bullish until we see a run lower on the equal lows, right? And this is the Judas swing. This is the manipulation run of the morning session. And I've been meaning to make a video on the Judas swing on the manipulation leg. I will be doing that, if not this week, definitely next week. So this is the manipulation move. This creates the low of the day inside that new week opening gap and that daily bullish order block again, after taking out sell side. So once I see that, I'm then looking for the market to trade through this inversion fair value gap. We'll trade through this fair value gap and treat it as inversion. Why is that? Because you can use fair value gaps to measure and read order flow, right? So fair value gaps can be used for several ways. As entries, they can be used as a means of reading institutional order flow. And they can also be used as targets as well. So with that in mind, we take out sell side, we get above the new week opening gap, we displace through this imbalance, and we close above it. As soon as that happens, I'm looking to take a long entry. I was fumbling around a bit with my broker, so I had to end up getting in here. You'll still see that's a key level if you look at the video that's going to be included at the end of me actually calling all this live. I am still going long inside of a 15-minute gap, which is back here, but I want to keep this one simple since it's just for YouTube. So I did use a entry here inside of a 15-minute gap that was extended through that I was using as another key level for the morning session. However, the inversion fair value gap confirmed to me that the market was trading higher. So as I was saying, if I can use fair value gaps to read sentiment, read shifts in order flow, I can treat this like a market structure shift or like a change in the state of delivery. So if I'm already bullish, the market runs sell stops, then we trade through an inversion fair value gap. That's the trigger for me to want to look for higher prices. And then I can use any discount array, which is just a level below market price, bullish order block, fair value gap, an inversion fair value gap. Then you can use any of those levels to buy and go long. But if you try to go long before the manipulation happens, those levels won't work for you. So once we close above this gap here, market trades higher. This gap here that we were using as resistance to sell off into the equal lows then becomes an inversion fair value gap. Why? Because the market is drawing higher. Again, you always want to start from your weekly, your daily, hourly, 15, 5, 1-minute chart, right? Don't get lost in the sauce here on the 1-minute charts because it all comes from, again, the top-down perspective that I have on the market. And then if you also notice when they dropped it here, we go into replay mode, and this is the only time you'll ever see me using replay mode. Look at the market at this point. What does retail see? Low here, so we just saw support broken. And now what's up here? 1, 2, 3, triple top, double top here. So retail seeing what? Resistance, and that the market's weak. And then they chase the run lower here. We're not chasing anything because we understand the market is bullish. And again, I did cover that in the weekly outlook. If you're not already watching that, then you're missing the boat there. So with that, we're going to look for the market to trade into the buy stops here, here, and here. So let's get out of replay mode here. All right, so going back to the 1 minute chart here. So this fair value gap that was previously used as resistance, we're then going to expect it to use as support. Why? Because the damage has already been done. Now the market's entering a buy program. If you remember what I was sharing back here, once we get above the fair value gap, that confirms order flow is bullish. That's not the only thing. There's several things. There's a bullish order block down here, shift in market structure here. So there's several other factors, but I'm mainly teaching the inversion fair value gap here in this video just to keep it more straightforward. And then what you'll see here is we get above the gap, and then what do? We stay in the upper portion, right? It can't get through the midpoint. That's what we want to see because that's confirmation that the market is still bullish and going to keep rallying higher. This fair value gap here, why is this not a short, right? Look, buy side, swing low. We took out market structure to the downside. So now that should be a selling short opportunity to go lower. No, not if the market is bullish. So it's going to treat it like an inversion fair value gap where the market gets above it, uses it as support, and then expands higher into this news high that formed again on the high impact news. And again, that's significant because there's a lot of traders wanting to place orders and take trades around high impact news. So again, the swing points that form here and here around that liquidity are going to be extremely influential to be used for that session. And then the other thing that allowed me to trust higher prices was the opening range gap. All right, so you see here we opened at 930. And this is also a good discount entry here because you'll notice I'm buying below the 930 opening price. So if you're bullish, the best entries are going to form below the opening price. You can still take entries above it. It's just not the ones I'm looking for. I'm looking to get as close to this low and below these opening prices as I can in my entries. But if you look at the opening range gap from where we closed on Wednesday to where we opened this morning, let me make them thicker so you can see them clearly here. So this is the low, upper quadrant, midpoint. So the low hanging fruit was just the 50% level, and that's what you'll see I was taking partials off here. And then that also overlapped with the news high, and then that's not random that it made the high of the morning session until we went into the 11:30 lunch hour. So with that, guys, hope this one was insightful. We're going to include a clip again of me calling the market candle by candle, so you can see how this information is not only used in hindsight, how it's taught, but also how it's applied on the right edge of the chart to make money. Hope it was insightful. See you on the next one. Sell side taken, 15-minute fair value gap, and smashing that daily bullish order block perfectly. So what I want to see is, do we displace away from here and start to work higher? That's more so what I'm interested in. Because again, do keep in mind, we are at all-time highs. So I'm looking to trust buy models. Doesn't mean we can't go short. It's just the initial bias, always looking for higher prices. Unless the market decisively confirms that it's bearish, it's weak, then we can take that information as we get it. So far, first few minutes, you guys know my style. I'm watching how they set things up, what it is that they're looking to do going into 10 o'clock. If we're bullish, what do we like to see right at 9:30? Right, move away from what it is that we want to see. All right, so the orange box, that's going to be the new week opening gap. I'm not going to keep it on there long because that's just too many levels on this specific chart for me. So far since the 9:30 open, dropped, held it in this range. Personally, I'm not interested in anything to the upside until they disturb these lows here. I'd like to see something there. That's too clean. If they send it higher from here, then they let them off the hook too easy. So again, Nasdaq's cleared out its sell side and trading into its new week opening gap. So the new week opening gap, how we trade here is going to tell me a lot about today. So here's the scenarios, right? Sell side taken. Initially, we look for mid gap in the first 30 minutes right here, but it's not having it, and we're in 10 o'clock now. So what I'm looking at is how we trade inside this new week opening gap. Two different scenarios. If we trade into it, find support, leave some of it open, and trade higher, then that would be bullish, and that would indicate we'll likely work into these highs here, here, and this high back here. and then into that mid gap level here. Look at all these smooth highs they left up here. So they left smooth highs, dropped it lower. Now we're back above that new week opening gap. So this here would be a draw. Trade up into these highs here, and then look to potentially work into this gap here. So then this gap here would act as an inversion fair value gap. Smooth highs here, and then we have this 830 news high back here. So sell side taken, they left equal highs, gave you guys this as an inversion fair value gap here real time. You should use it as support, and then launch into these highs here, and then look for a run to mid gap there. And I would want to see it do it quickly. So you see how they left this gap open? That's a breakaway gap. So those are signatures that we want to see. All right, now this 15-minute gap, keep in mind what that blue box was, right? That's that 15-minute gap. Now that we're above it, I'd want to see it use this support, and I would not want to see the market get to the low end of that gap. Let me take off the new week opening gap that served as purpose. So this 15-minute fair value gap here, I would not want to see it get below consequent encroachment or midpoint. So small fair value gap here, want to see that act as support would be institutional order flow entry drill. So on the 15-minute chart, we dropped down 3 consecutive down close candles. That makes the bullish order block. So I'd want to see this 15-minute candle find support in here if it's going to be bullish, if it's going to be good to the upside. On the 15-minute chart, right, what were we dropping down into here? The 3 down close candles, bullish order block. So that's how you can anticipate candles that are just creating the wick to then see distribution to the upside. All right, so looking at this gap here, I'd like to see this also act as an inversion fair value gap, right? Open, trade down into it, use it as support, and like a launch pad higher. Why is that not a short here? Because again, top down, we're bullish. All right, so there's the mid gap of that regular trading hours. All right, there's the news high there. Okay. Boom.